Hi everyone, I'm Bag Don at StockMarketCaddy.com. You are looking at our setup for the Russell 2000, the futures contract, the RTYM 19. And it's actually in this position now. It's short. It's up about $30, had a $10 drawdown, and is continuing to run. You're looking this particular chart. If it looks different to you, it is what we call a Renko chart. It's a customized Renko chart. We have our own proprietary way of sizing these Renkos. Critically important that you understand how Renkos work and that you size them properly. Garbage in, garbage out. We also have on this particular chart what we call the dynamic range finder. To be complete, it's this one right here. What's beautiful about the dynamic range finder is that when price breaks range here, it really marks the direction that price wants to go. Not just between the ranges themselves, but more importantly, when they break range. We utilize an indicator that we call the SMC GPS near indicator. And this momentum indicator proprietary to us. The second indicator is the SMC GPS distant indicator. And what we do is we earmark these. When the two are in congruence, are in the same direction, red with red, we know we're in a definitive trend down. Green with green. When prices are falling and the GPS distant is still green, then we get a yellow cautionary counter indication. When prices are going up, when the distant is red, we get a cautionary counter long signal. And when we're transitioning from red to green on the distant, we have these vertical stabilizer bars that pop up. We can turn them down if we want. And that'll tell us what the dominant direction is. Not that it follows it for every single brick, but the overall move. Same here, overall move. You see, folks, we've been working hard. Prices do trend. That they do. They may be for long periods of time. They may be for short periods of time. The beautiful thing here is with all of these proprietary tools on, this is a price chart, not a time chart. So we're going exactly where price is going. If you like this sort of approach to the markets, to whatever it is you're trading, and you want to approach it from a mechanical standpoint. What do I mean by mechanical? Well, we're not interested in what the stock pimps say or the Contrarian News Bubble channel, or this guy's alert system and that guy's alert system. What we're interested in doing is trading the markets through our proprietary systems that have been back tested and forward tested, and we know how to manage that risk. Every trade we put on has a risk. Before we put it on, we know precisely, right down to $5, what it's going to cost us to take that risk, if we're right or we're wrong. And then we take steps almost immediately to take that risk off the table or maybe reduce it significantly. And we do that through using stop losses. As soon as we can get that stop loss moved up and over or under our entry price to protect ourselves from anything on a negative outlier basis from happening, that's what we do. And by doing it day in and day out and keeping track and keeping score, we put the odds, we put the edge in our camp. And not to mention, we have the swing machine running live. You could have the swing machine running live and monitoring what the markets are doing minute by minute, which is certainly compatible to what we're looking at here. I'm Bagadon at StockMarketCaddy.com. If you'd like to talk to me, you'd like to sign up maybe for our next Jumpstart class and get you headed in the right direction, why not, right? Why not? The time is now. Feel free to give me a call, 813-758-8263, 813-758-8263. Let's chat. Call anytime.